The Indian equity markets witnessed a volatile budget Sunday as initial optimism was quickly overshadowed by a sharp hike in transaction taxes for derivatives.
While several sectors, they cheered the targeted reforms, the headline indices buckled under the weight of increased trading costs. The market reaction to Finance Minister Nirmala Sitharaman's budget 2026, it was swift. The Nifty 50 witnessed a deep sell-off when it briefly slipped below the symbolic 25,000 mark. The BSE Sensex followed a similar trajectory, cracking below 80,000 points before it began recovering. The primary catalyst for the market's retreat was the proposal to significantly raise securities transaction tax or STT on the derivatives segment, a move aimed at curbing excessive retail speculation. Despite the gloom in the indices, specific policy announcements triggered green shoots across several sectors.
Hospitality stocks rallied as the government identified tourism as a primary engine for growth creation. A new pilot scheme was announced to train 10,000 tourist guides to a specialized 12-week course, and shares of power stocks surged following the announcement of a planned restructuring. Now, of these state-run leaders to strengthen the public sector financial ecosystem, the healthcare sector was a standout performer, fueled by the launch of the Biopharma Shakti initiative, with an outlay of 10,000 crore rupees over 5 years. The scheme aims to make India a global biopharma hub.
And the Finance Minister, Nirmala Sitharaman, presented her 9th Union Budget outlining a growth strategy anchored around what she called 3 kartavyas or duties. And of course, joining us here in the studio is Mr. Bhutani, who's been there with us to analyze what exactly these kartavyas and everything that's entailed in the Budget 2026. Mr. Bhutani, earlier as we were speaking, you mentioned that you will be spending some more time to understand what exactly has caused the markets to react the way they have and the securities transaction tax. Now you've had some time to go over it. Give us your analysis.
In a lighter vein, I still haven't seen the amendment bill, but yes, the explanatory to the amendment bill runs into 95 pages. So you need to feel some mercy for me. No, I think on a more serious note, I think you're right that the market has reacted negatively to the securities transaction tax. But if you look at it, these are on options and futures. So I think that is something that the market was expected to react because, one, nobody anticipated this move. One can't figure out whether the move is largely motivated to discourage non-institutional investors participating in complex instruments such as derivatives, futures and options, or it is targeted towards institutional investors. Obviously, for institutional investors, the cost of entry and exit goes up as a result of this fraction. And this fraction is a significant amount given the volumes in the markets. So that seems to be the driver. I can't see anything negative on the tax proposals. Particularly for me, some of the proposals sound very, very reformative. Let's take a case of decriminalization. Now, this was a very significant, downer for many businesses. All taxpayers were treated in the same manner: small, medium-sized, large, multinational taxpayers. So, if I just look at the decriminalization, just 12 pages in the explanation has been devoted to this section. For me, the highlights are that the nature of punishment has changed. One, from rigorous imprisonment to simple imprisonment. Two, the tenure has changed from 7 years to 2 to 3 years. Three, some of the offences have been decriminalized. And four, some of the offences, the courts have been given power to decriminalize and instead have penalties. In my view, this is a significant move. Second, on the overall assessment procedure, today, if there is a disagreement between you and the tax department, they raise an assessment and then they have separate proceedings for penalty. The law has been amended to combine both these proceedings, number one. Number two, no penalty provisions will trigger in up until the time the first appellate authority has decided the case. Number three, there was a requirement of prepayment of tax of 20% that has been reduced to 10%. So to me, it seems that the entire machinery of the tax administration, which was devoting disproportionate energy, and so were the taxpayers compelled, to follow that and were under pressure, for both the assessments, disputes, and the penalty regime have all been compressed. So this, in my view, is the most reformative part. You will not see the impact of this change immediately, but you will see it over a period of time as we go ahead into the assessment.
It is being termed as a long-term budget.
It is, indeed. And I think this is a very reformative change. Some of these changes have been in the statute since 1961. We carried forward the 1961 statute. We had carried out small changes to the regime over the years. We did not carry out any substantial change in 2025 Act. And that is the reason also there was an element of underlying criticism. Isn't the new Act a rehash of the old Act? Well, no. This is the proof.
It's simplified.
The new Act is not a rehash. There are some reforms which are being taken in a staggered manner.
Understood.
Right, and so you've called it reformative, and we had Mitali Nikore with us just a little while back, and she said that it is rather a forward-looking bill, but that is exactly what we need to achieve the target of Viksit Bharat 2047. And you've also mentioned how the taxpayer's voice is being heard, but do you also think that taxpayer needs to be cautious and also look out for these caveats like the one that you just mentioned right now?
Well, I think there is often a criticism about the administration that we have all kinds of penal provisions, prosecution, but who actually gets prosecuted? Very few. Now, with the cleaning up of the law, you will see fewer prosecutions, but department will make out a case for a person who is a persistent defaulter, for a person who is who does not feel the fear of the law. Those cases will come up for penalties and prosecutions. So, majority of the taxpayers who are either compliant or who have seen a technical breach, they will get away with the small fines. And that's also the guiding philosophy. So if you look at the Black Money Undeclared Assets Act, if you go back into 2015, there was a 3-month window between July 15 to September 15 to declare assets. Now, what was the outcome? Small-time taxpayers, students, people who had technology businesses moved out, kept bank accounts open even after returning to India, kept some assets. Now there is a one-time amnesty given to those individuals. So you're really cleaning up the old law that applied to everyone, whether you have hidden assets of 5 lakhs or 500 crores. You were treated in the same manner. Now they're saying, no, we're going to give amnesty for those class of taxpayers, and we are going to focus on the large taxpayers from a penal perspective.
Mr. Patani, from a larger perspective, if you look at holistically, if you see this budget, how much do you find it to be equitable in taking the entire country, all sectors, all industries, or all different pockets in terms of states as well, taking them forward? There are a lot of growth corridors which have been mentioned with the rail corridors, rare earth corridors, industry and logistics corridors, a lot on the medical sector as well coming in. How much of, and of course, how can we leave out the mega textile parks also coming in? There is subtle messaging to other countries because India is finding it in itself, but also within India, how much do you find this budget to be equitable in terms of growth?
Well, you need to divide the principle of equitableness in 4 parts. Okay. 1, people who have received direct tax benefits. So there are classes of business that have received direct tax businesses. Data centers, large companies who are going to move their global value chains into India, the likes of Apple. So there is not a concession, but there is clarification for those businesses to bring in investment. Then there are second class of businesses that will benefit from the tariff regime. Now these are the businesses that either are high growth potential. For example, if you look at the aviation sector, import of raw materials for maintenance operations of aircraft, basic custom duty has gone away. So, there are certain benefits that have been given for the tourism sector. That's again a fiscal benefit. Then there are third set of benefits which are given from a allocation standpoint, that the government considers this as a thrust area. The annual budget exercise means we will allocate this much. And then there are others, I would put them in the 4th basket, wherein there is more a long-term thinking and it's agnostic to what kind of business you are in, whether, as you correctly pointed out, rare earth and many classes of business. So you need to give a context when you raise the fundamental question of equitability, because all of these four kinds of announcements in the budget are catering to different classes of taxpayer across a spectrum of various industries.
Absolutely.
And this time there was also this focus on inclusion and how the policies have to be made attractive for everyone. And as you've mentioned earlier, there's something for everyone in this budget. Now, having said that, I think it's also been recognized that there's so much untapped potential which is still left untapped in Tier 2 and Tier 3. And we have all sorts of announcements that we've made, be it in terms of tourism or the healthcare tourism, in fact, and the corridors that Shivan has just mentioned. Now, do you think this is going to actually play out in the way that it's been mentioned, and the turnaround time is going to be such that the benefits are received by the taxpayers and by the citizens in the near future, or is it still a long-term approach? We'll have to wait and see how it pans out.
I think I would put it a medium to long-term. Again, this is a long-term play. For example, why aren't certain categories of businesses growing outside the A-town, B-town? Well, the fundamental challenge was infrastructure. So, high-speed rail is directly appealing to your tourism sector, because the moment you have high-speed rail, whether tourism is driven for medical reasons or it's driven for religious reasons, you have businesses there. Businesses such as outsourcing have already gone beyond the metros. The cities of Chandigarh, Jaipur are already there. Now it will spread into sea towns with the growth in infrastructure. So I think it depends which business are you appealing to. Now, you will take a lot of time to move high-end jobs on engineering unless you are in a hub like Pune. So, these jobs will be around those clusters where engineering graduates are high. But I think over a period of time, to me it seems that there is thrust and focus on development of infrastructure all across, whether it's rails or roads, and spreading out in a manner that the development is much more equitable across the length and breadth of the country.
Mr. Bhutani, it's interesting you've said that we have so many long-term policies that have been announced. What are some key announcements that have been made which will provide instant relief to the citizens if there are any? Or any short-term relief that could be provided?
Yeah, and also if you can put a timeline to this long-term budget benefit, like what kind of timeline are we looking at? Right up till 2047? Or could it even happen earlier as the fiscal deficit has come down as it was predicted to happen within a
Well, tax proposals are always immediate. That's the shortest because it's appealing to 1 year. Some tax proposals are long-term. For example, the clarity on data centers is up to 2047. This is unprecedented because if you look at the history of any form of concession, clarity, tax holiday, it's 5 years or 10 years. This is 2047, so 20 years. This is the longest I've seen in my career. Some of them are medium term. So if you look at the global value chain, bringing global manufacturing into India, there was always a challenge whether non-resident companies that are providing services by way of giving gratis plant and machinery for tooling purposes to be used, that's 5 years. If you ask me, I think we should have gone for 10 years. Why do I do that? If I am an entrepreneur, if I am part of a board of a global company and I'm looking at moving my global value chain into India, 5 years is short term. Because I'm going to commit substantial capital investment, I would have looked out for 10 years. Similarly, my big ask on giving exemption to sovereign wealth funds, this was a master stroke by India in 2020, but the sovereign wealth fund exemption was 3 years. Come 2023 or 2024, we took it for another 3 years. Why? Give sovereign wealth funds 10 years, 15 years, 20 years. So they have a long-term view about India. So I think we have a playbook now for data centers, tax clarity until 2047. We should have a similar playbook for all businesses that are capable of attracting huge doses of foreign investment.
And also, Mr. Bhutani, we were speaking about like a timeline that I asked you. Maybe this gives a window into that when India says that there'll be a tax holiday till 2047 for any foreign company who wants to provide cloud services using data centers in India. So do you find that to be a strike, achieving two targets in one? Because A, you're also inviting more foreign companies into India, and at B, you're also preserving data centers within India, pushing both?
Well, as I had mentioned in the morning, 70% of data center capacity is now with developed economies. So India is missing out on that. I think this move will move new data center investments into India, number one. Secondly, let me clarify, they were not seeking tax holidays. They were seeking clarity on a very nuanced subject. I have a data center in India. I will pay tax on my profits made in India, for which they have given a safe harbor of 15%. But I was exposed insofar as taxation of my non-resident customer was concerned. So that clarity has been issued. That non-resident customer now will not be liable for tax. Of course, subject to conditions and the fine print that we need to read into.
Definitely, it was something that a lot of the analysts said we didn't see this one coming, but then of course that's.
I saw it.
You saw it coming. You mentioned it briefly in the morning as well, and also I wanted to understand from you the targeted efforts towards different sectors. But when it comes to farmers, do you find it to be numerical as much as figures are concerned, or is it more in words than figures at this point?
Well, I must confess my handicap on impact on farmers, but I just wanted to clarify some more principled issues. Agriculture income is not taxed in India, so you cannot have anything in the Finance Act or Finance Bill which will appeal to farmers. On the farm sector, I think on an annual basis, you have been receiving, attention by way of scheme, whether it's got to do with subsidy for seeds or subsidy for fertilizers or irrigation. But you shouldn't lose sight of the fact that if you look at the trend of how much is farming and agriculture forming a basket of the GDP over the years, after the economic reforms of 1991, it has considerably reduced. Most farming segment gone into either they have moved up the value chain, say for example agro processing, or they have moved away from the rural areas into urban areas. So that shift is clearly visible. I think that our policies have been largely pro-farmers. Some of the debated policies unfortunately could not have been communicated, which was resulting in the farming community up in arm against the government. A classic case was 2021, the 3 farm bills. But I think more or less the policy makers have been very sensitive towards the needs of that community. I think that that community does need support, whether it is coming by financing or it's coming by subsidy.
America has also been eyeing the agriculture sector very, very closely, trying very hard to get into it. I'd also like to just recall what the Prime Minister had mentioned during the Independence Day speech, that, I stand as a wall in front of our cattle breeders, our fishermen and our farmers. So you do find reference of that here.
And it's interesting that you mentioned that comment, because the Prime Minister's comment was more because he found himself in the middle of an announcement of the trade deal. And in any trade deal, in any jurisdiction, protecting that community is a national importance. So he kind of was trying to say that whereas I'm going to sign free trade agreement because India is open for international trade, but I am not losing sight of the fact that I'm going to protect this community.
Understood. All right. That was Mr. Bhutani joining us right here on the broadcast. He's been here with us in the studios and, to disseminate exactly what this budget entails for everybody. Mr. Mukesh Bhutani, Managing Partner, BMR Legal. Sir, thank you so much for making time for us and being here, taking all our questions and bringing a simplified understanding of what Union Budget 2026 means for all of us as citizens and for the salaried class and everybody else across the country. As of now, Diksha and I, we're going to be taking a very short break. Please stay with us. This is our comprehensive coverage of Budget 2026. More coming up after a short break. This is Beyond World is One.